Hello. Good afternoon. The next panel is on unlocking the code, the essentials of fundraising in gaming. We have Paavan from Winzo, Manish from Kratos Gaming, Pratik from Nexus Venture Partners, Anupriya from Nazara, Karan from Light Fury Games. It will be moderated by Kaushal EY.
He's in spirit. Okay. Manish is present in spirit. क्या करें? चलो मैं यहाँ बैठा हूँ. Should we just remove one chair? चलो. Is he coming? I'm moderator. That's true.
Hi, good afternoon, everyone. Next panel is on essentials of fundraising in gaming. My name is Kaushal Shah. I lead EY's investment banking practice for the media, entertainment, and gaming sectors. We have an interesting panel today with a varied experience, both on the sell side, fundraising, and buy side. And I'll sort of request the panel to introduce themselves. A quick round from all of you first.
I'm Karan Shroff. I'm the founder of Light Fury Games. We have three founders typically, Anurag, Tina, and me, that we've started a gaming studio, and we build AAA games out of India.
Hi everyone, I'm Anupriya. I head corporate development at Nazara. We are India's largest listed gaming company and very happy to be here and talk to all of you.
Hello, I'm Pratik Poddar. I work at Nexus Venture Partners. We are a India-US fund. We manage about $2.5 billion of assets. First investors in Postman, Pubmatic, Delivery, Unacademy, Rapido, Zepto, and so on. In the gaming space, we have invested in Liquid Nitro, Brightpoint, Mega, Cajun, and a few more. Yeah.
Good afternoon, everyone. My name is Paavan Nanda. I'm co-founder of Winzo. We are proudly India's largest social gaming platform with 200 million users, building for close to 6 years now. We partner with third-party game developers to integrate their content on our platform. We have recently gone live in Brazil as well.
Thank you. With this, I'll start the session. Maybe the first question is, Paavan, for you itself. You've raised nearly $100 million in funding over a period of time. How have you seen the landscape changing from your pre-Series A or Series A to the latest round that you did? What's changed in terms of investor perception? What's changed in terms of valuation? What they expect?
Thank you. Straight away posing the first question to me. That wasn't part of the script. But first big difference would be, I don't think so, 6 years back in 2018 when we started off Winzo, we could have constituted or been able to even constitute a panel which will have 5-6 people who would be interested in investing in gaming, right? And I think we have come a long way. We all know, in IGDC, if you look at Investor and Publisher Connect, there's a billboard everywhere. We are like upwards of 50 people who are keen on investing in gaming, right? So we've come a long way as an industry in the last 6 years. Back in 2018, there were hardly handful of people who would be interested in gaming. Most of the investors were used to consider gaming as a very hit or a miss business, and very difficult to sort of really understand whether they should go about investing or not. We were very fortunate. We somehow managed to convince Kalari to give us a term sheet. That was the only investor who was keen to invest in us. And we just somehow managed to convert that opportunity. We raised $500,000. And then we really I would say, did the world, did the universe with that $500,000, you know, stay as capital efficient as possible. I mean, to the extent where like sometimes we, you know, for first couple of years we thought, why should we even move, like go and attend an IGDC, you know, who will take care of the airfares and this and that, right? So like really thin. Sometimes you also take bad decisions when you're so capital efficient, but yeah, so on and so forth. And then of course, you know, over the period, things have totally changed. You know, when we raised capital, you know, our Series B, which was $16 million fund, that was in 2020 in the middle of COVID. So COVID was again something which, you know, one side took the entire industry south for a couple of weeks and then really, you know, boosted to its all-time high. We saw makers and courtside who came on our cap table. They were the, you know, dedicated gaming funds, globally best gaming funds who invested in India for the first time, right? So a great win that way for the Indian gaming industry. And then the next year, Griffin Gaming Partner came on our cap table back in 2021. So all in all, I would say in last 6 years, from having not even a handful of people who are interested in investing, and not for anything else, but because they did not understand gaming or gaming opportunity or feeling confident enough to, you know, to sort of get this capital in, to, you know, 2024, where we have almost every marquee investor, you know, having their gaming practice, you know, all broad-based consumer tech funds have a gaming practice, gaming partner looking at it. We have dedicated gaming funds like Lumikai. We have, of course, international investors, international dedicated gaming funds who have come in for the first time. And then we, of course, have corporates, right? Like, for example, a lot of profitable ventures, including Winzo. We also have like a $50 million fund earmarked to just invest. Nazara is there, right? We've come a long way, I think, expectations-wise as well. People are more open to more ideas, and like people have figured out thesis, how to bake in the risk of, let's say, you know, a hit or a miss kind of a business. I think from an entrepreneurial standpoint, there are people who are building a lot of things. It's not just about, you know, creating a game, but creating platforms, different ways to monetize, you know, RMG, non-RMG, IAP ads, platform-like, ad tech, game tech. A lot of stuff is happening, you know, and it's only going to get better from here. So very, very proud of the way as an ecosystem we have come a long way, at least in the funding aspect.
Right, right. And just to add to that, Paavan, you mentioned that your first fundraise was $500,000, right?
That's correct.
So from there today, we have Karan, who's he's done his pre-series A of what, 8 million odd?
8.5.
8.5 million, right? So, and Karan, you come from an industry edtech background, right? Which again has seen a lot of funding activity in the past. So coming from AdTech, coming from the fact that your first pre-series A was itself 8.5, how has been your experience?
I think it's phenomenal, and a lot of credit goes to the founders that have kickstarted the entire industry, like Paavan, you know. It's easier for us to have conversations with investors today, explain the dynamics of where gaming would go, you know, how to build the entire ecosystem in India. And they're far more open than what it was a few years ago, or less challenging than what it was a few years ago. I think it's important to sell the vision. It's important to explain the magnitude of the business opportunity that we present, and then the funds follow. There needs to be a vision. There needs to be a lot of gravitas in your idea and what you're doing. It can't be short-sighted. It can't be small. If you want to raise good capital and if you want to build a good business, you need to have proper strategies in place, monetization plans, everything from the get-go. So I think, you know, the industry has evolved from where it was significantly, and the future is, of course, far more promising. But yeah, I think we've come a long way, and it's been exciting overall.
Right. Now, we've got an investor on the panel as well, Pratik. I'm sure you'll be getting hundreds of opportunities your way across a variety of sectors. And in gaming, as Paavan was mentioning, it's kind of a hit and a miss model at some point in time. There are a lot of criteria that you have, or you may be having, right? So how is that you go about creating a funnel from the pipeline that you have to say, here's the opportunities that I have, how do I shortlist, how do I go down, what is it that you see which makes a particular gaming company stand out from the others, and then helps in your thesis. And there are multiple things that I think Karan mentioned, promote a vision, business model, monetization. Paavan mentioned a few things. So what's your secret sauce?
So maybe I'll start by saying there are various aspects in the pitch that we are looking for. One is market. Now, and I also interface it with what are the mistakes founders do when they are pitching in that context. So not all markets are large enough. And hence, not all good businesses or good gaming ventures should be VC fundable. So from our vantage point, market size is a very important aspect that we look for.
Okay.
The proof point of casual games for India, from India, is not there yet for a very large outcome. And hence, we ask that market size question a lot more in that vertical. So market size is a very important question that we look for. The second thing that we look for is team, which is the most important aspect of the business. So a lot of companies, so in general, at idea stage, it's so difficult to differentiate between the pitch because the stories are broadly similar. But the team experience, what does this founder know that no one else knows? What does this founder believe in that no one else believes in? What has this founder seen in his previous experiences that no one else has seen? Those questions become much more important from our vantage point. And the third is approach, and that's where Karan's points on how is the founder thinking about acquisition, because at the end of the day, the market is competitive, and what is the differentiated thinking around acquisition? What is the differentiated thinking around monetization? Those questions become important. So it boils down to answering these questions and then believing in the founder and then taking a bet. But it is truly, truly founder-centric, and everything else revolves around the founder for most things.
But still, how do you differentiate, say, there are 4 or 5 companies that meet this criteria. How do you differentiate one against the other? What's the secret sauce, or what do you think about? What's the way in which you, okay, fine, I will bet this, I will back this particular promoter or this company, and maybe not the other 2 or 3 that you have on your pipeline? Because when I talk about gaming, right, most of the things that you mentioned, product market fit, no promoters, I think more or less will be there. What's the differentiating factor for you?
Yeah, actually, it's not as easy as you are pointing it out. It is competitive market, and founders actually present very, very deeply and do a lot of work and think about a lot of these aspects very deeply. So it's not as easy as you pointed out, and all the founders here can attest to it.
Right. No, I mean, a food for thought for the founders who are there in the room. I'll shift gears a little bit. Anupriya, Nazara is probably the only listed entity in this space in India. And over the years, Nazara has seen both multiple rounds of fundraise. They've also been deploying the funding, right, by doing multiple acquisitions. You are listed, so you have to deal with a varied set of investors as well, right? In addition to the traditional PE VC funds, you will have DIIs, FIIs, HNI, corporate VC funds, all of them sort of that you work with. How's the experience? Is market volatility, sentiments come in play when all of these things are discussed at a board level?
Yeah, sure. So if you look at the investor universe, right, there is a set of one VCP world of investors. Then there is a public market investor divided into institutional or retail, right? Retail is more people like you and me who get jittery with short-term market movements and do swift in and outs. The institutional provide the stability in terms of being long-term investors. DII versus FII, it depends on how much is the sector attractive for them, right? So for example, DII investors, domestic investors, especially in the Indian markets, want to ride this wave of Indian gaming market becoming big. They are believers somewhat believers in that story. FIIs still have to, in my view, especially in the context of Nazara, will have to buy in a lot more, taking that leap of faith. So yeah, that has been our journey.
Right. Paavan, coming back to you, your investors, you've had many of funds who are investing in India for the first time, right? So there's a domestic PE VC funds that you deal with. There are global funds who are looking to get into India for the first time. So from a founder point of view, are there different thought process, different criteria that a global fund getting into India is looking at versus what an Indian fund who's already there in India the way they evaluate, the way they sort of get the deal done, how different or how similar is it?
So I wouldn't just differentiate between a domestic and international fund, because even within domestic, every fund has a DNA, right? And even within India, if you speak to one fund versus you speak to other fund, there's such a big difference between DNAs that their evaluation criteria could be very, very different. And not just evaluation criteria, right? Like what Pratik mentioned, everybody wants a big TAM and everybody wants to hit $1 billion outcome. But it's just the people and the mindset, right? And the best match happens when, as a fund, whatever my DNA is, I'm able to find out the right entrepreneur with a similar DNA. And I mean, as an entrepreneur, see, we need capital, right? I mean, I'm very sure early stage, most of the folks need capital. What's important is if, let's say, you are pitching to someone, while it's great, I mean, we need to understand that it's a 10-year journey, right? It's a very long journey. So you can't, like, fake it till you make it as a very Western phenomena. All that doesn't happen, right? It's a very tough job to build a company. You cannot, like, fake it or create an artificial layer again, Let's say, for example, I'll tell you kind of, faking. It's not like any numbers and all. It's basic ideology, right? For example, there could be an investor who's like, I want growth. I want 100% year-on-year growth, no matter what. Let's not talk about profitability, at least for next 5 years. Take some irrational decisions. That's okay with me. But on the other side, there could be an investor who's like, I just want rational decision making from my founder. Now these are very different DNAs altogether. And if, let's say, I meet somebody, who's like very growth hungry, I can, like, of course, go very aggressive, start pitching that way. Eventually, first couple of weeks, eventually things will start falling apart because there's going to be a DNA mismatch. So I'll say you need to really first understand what do you believe in. And then for every investor, that you go ahead and pitch, I think the best an entrepreneur can do is making their own life easy is to just be honest. It could happen that there are, of course, certain attributes which will have maybe, I don't know, 80% of the investors like you, but let's say if you are brutally honest, it might happen that only 15 or 20% of the investors really like you, but they'll do your job. As a founder, you need one term sheet. As a founder, you need one yes. It's okay to get 99 no's, right? And at least that's been my mantra. I have 3 investors, international investors, who came in India for the first time via Winzo. None of them met us, even like, leave aside after investing, even like 24 months after investing, they never met us, right? And like Courtside is giving you an example of Courtside. It was the darkest time, COVID had come in, one investor last minute took away a term sheet, we were like, literally, we were on the eve of signing an SHA. And I had like a couple of weeks of runway left. And to Courtside, I dropped a mail saying hello@courtside.com. On their website, I dropped a mail, with our metrics. Metrics were so good, after that, we spoke to them. They were like, boss, we thought there's somebody from, some country, I don't want to like name but like scammer, reaching out and, showing these metrics so that we can wire the term sheet, because right now nobody can meet in person, it's COVID happening. And we joke about those things, right? But yeah, we literally went on the calls, stayed as honest as possible. And the DNA of a Makers and a Courtside and a Griffin, all 3 dedicated gaming investors, first time investing in India, but have very different. Somebody goes really deep into understanding your business. Somebody else does not even talk about business. What they'll talk about is, how can I establish a very strong relation with you as a founder? Third person does not talk about business, does not talk about founders, hardly even talks to you. The only time they'll talk to you is, what big can you do with the money that you have in your bank, right? I mean, very, very growth oriented. So, so there's no India versus domestic, international versus domestic. Every investor is, true to their own sort of character, I'll say. But as a founder, you need to secure capital. So I'll say just find the best character match that you can by staying honest. But let's say but I will say choose capital over debt. But if you're having capital option, then choose the one with the best, the most, with the highest character match. That's all I'll say.
And just on that point, how do you manage the expectations once they are onboarded? So they may have a different style of investing, right? They've met you, they've not met you, they've done a diligence and whatever, right? But once they are on board, they are shareholders, they still have their own philosophy, right, of how the company should be doing. Versus you as a promoter will have your own philosophy. How do you try to marry the two and manage a varied set of expectations of the investors who are already onboarded?
I think that's what you call management of board, right? And that's very critical, especially when you have 4 or 5 different entities on the board. What we've tried to do at least, stay absolutely honest. Whatever we believe in, we are very, very vocal about it. If somebody's, let's say, for example, saying something that we do not believe in, we'll not stay silent on that topic. At that point, we'll correct that person. We are okay to we are okay to confront there and then, but we do that so that, everybody knows what everybody else is thinking. And second is, we try to run the company as professionally as possible. Before every board meeting, we'll speak to every person, ask what they want to cover in the agenda. We'll send a deck beforehand. We'll do a summary afterhand. But, we try to believe in written communication as much as possible. We don't do side chatters as much. So, yeah, the usual stuff, which happens in any corporate, right, for that matter. Whether it's a team, there could be conflicts, yeah, but that's about it. And staying to, being very, very honest, that's the get-go. That's the beginning of a relation. If you're honest from the beginning, mota people also know that this is the kind of person I'm going to deal with for next 10 years. Sorry, Pratik.
Right. You have, Pratik, to add something?
I want to add here, it's very, very well articulated. Very well articulated. And when you said, how do you really choose entrepreneurs? That is the emotional aspect of it. You don't really choose entrepreneurs, it just happens. When you meet that entrepreneur, you know that you want to work with this guy. And a lot of times, like, it is always mutual. So it is not competition as much, hey, this VC, that VC, no. You know both of us are working together because both of us have that chemistry, trust, and later as well, once you know that this is the type of person I am working with, then you are actually trusting the founder on the board as well, that the founder is deciding the path for the company. And even if, of course, investors would have a point of view, but the founder is taking charge and founder is defining the path for the company by managing the board right, by communicating the board right, and by educating the board that this is the way the path needs to be managed. So very, very well articulated. And you use the word honesty many times, and that is the key word. Honesty and trust is the key word here. That if you trust the other party, that he will be with me even during the tough times, it works. And after that, it does not matter.
Right. Great. Karan, coming to you, right? Just taking ahead from what Pratik and Paavan have said, you've raised funding quite early into your sort of journey as an entrepreneur in the gaming space. That too in a sector which was not seen too much activity from a funding point of view or from a growth point of view in India. Right? So how was the investor sentiment, right, when you were pitching, here's a plan that I have for a AAA game coming out of India. How did the investor sort of take you, and what was the sentiments that you heard?
I think like any founder, we had our own set of rejections, we had our own set of questions, challenges, right, while raising the funds. And it taught us a lot of things because when investors ask you questions about things you haven't thought of at times, and as a founder, you can always say that I'm prepared for everything, when that's a mindset you walk in with. But when you get interesting questions, interesting conversations, you go back to the drawing board and say, okay, did we miss this? Did we think about this right? Should we reevaluate it? Or no, probably we were right, we'll stick to our plan, right? So it's a lot of introspective thought process overall. It's very critical to the fundraise. The response we got was actually great. I think people were very, very excited about what we told them that we are on to when we said AAA games out of India. They said it hasn't been done before. How will you do it? And I said, we have a great team to add to what Pratik said. And, today we've assembled about 50, 55 odd people. And as we're scaling up, we realized that people are the core of what you do when you're building AAA games. We always knew it, but we realized the importance of it even more. So I think it's really essential in your journey. You will face rejections, you will face wins, and investors will always have, they're deploying money, they're responsible for it. So they will have their side of the questions. But I think it's about staying true to your motive and journey during that period and finding the right partner for you. For us, it didn't, I mean, fortunately, it did not take long to raise that capital, and we got it over the line. But I think, like Pratik said, it's about that bond that you ultimately build. So, you know, we've spoke to a few people, they saw merit in what we did, and you know, we got it over the line. So, and to add to what Paavan said, I think honesty is critical on every single step, not just in the early days, but it gets even more important as you grow larger. Been a part of a larger setup in the past, you know, with Unacademy, and it's absolutely critical to hold fort on that front all the way through. So I think as long as people, or not people, founders understand that through the journey, it's not a one-day job. It's something that you wake up and do every day. You know, wake up and push the mountain a little bit every day. You'll get somewhere soon.
I think it's far more personal a relationship than what we give credit for.
It's much more than numbers.
It's much more than numbers. So, as an entrepreneur, whichever journey you are on, you're bound to make mistakes. You're bound to pivot, repivot, and often that relationship of a sounding board in terms of investors is the best way forward. And those relationships, in my opinion, get formed very quickly. Like Pratik said, right? When I meet a person, I know that whether I can work with him or not, or her or not. So that relationship is very personal than what we give credit for.
It's very true, because it's not a journey for just funding, right? You're going to be with that investor, with that partner for as long as your company exists. So it's very important, like Anupriya said.
So Anupriya, when you are investing, right, say as a fund, or when Paavan you are doing from, for the fund that you have, from a gaming company point of view, right? Say if there's a founder in the room, how will they view a quasi-strategic fund that you have versus a pure play VC PE fund? Is there a nuance there? Will you be evaluating companies differently? Will you be able to take slightly bigger, better, bolder calls and bets than a traditional PE VC fund? What's the thought there when you are investing?
So with investments like that, there is always, it's a typical VC model within that corporate. So it's more like a corporate VC sort of mindset, right? And the ability to fail, the ability to take risky bets and things that you would not be able to do as a corporate is the most useful outcome that one would look for, right? So it could be a different market, it could be some emerging tech which you strongly believe that maybe it's not today, like something like AI, AR, VR. Things that we know that the technology is so fast evolving that the business models will stabilize very soon. But maybe as a corporate, I don't have that appetite to take that risk, but I back or even capability for that matter, right? We back a founder or a team which has the capability mindset and support them on that journey. So I think that solves for that issue.
Paavan, anything to add? Because you also...
Yeah, see, so what you do essentially is bases your experiences. So in Winzo's journey, where, you know, when we raised capital from somebody who was a strategic, and 12 months into it, that person liked, or that entity liked the business so much that they decided to start replicating it, right? And we had to give them a forced exit.
Right.
So we have seen it we've seen it the hard way. I think that was probably the darkest time of our company. And the moment we gave them an exit, it was such a massive unlock. You know, like literally gods came from heaven, you know, international investors coming in for the first time on our cap table, and we like literally grew so fast. So we know what an entrepreneur could feel if somebody comes on the cap table and, you know, is trying to probably, you know, do anything to harm their business. And we are very mindful of it. The way we go about it is we usually co-invest. The angle with us is that we have a massive user base. We have 200 million users, so we can give that push to that game, or, you know, because of our learning so far in the last 6-7 years, we are able to just add more strategic thought process, or probably just share learnings, or just share our resources with those companies. But that's about it. All these are minority investments. Whenever we'll even think of, you know, something majority, we'll call it an acquisition. We'll not call it an investment. Yeah.
Speaking of investors, Pratik, typically, funds will have an exit strategy in mind right on the day or even before they're investing, right? So from a gaming sector point of view in India, what's the thing on exit options for funds? Are we seeing that global strategics, there's increasing appetite for them to get into India, or is IPO, either on the main board or the SME is also kind of become a mainstream option to exit for funds? What's your thought on that?
So first of all, most VC funds have very large horizons, very long-term horizons.
Right.
In general, our fund cycles are 12 years, 13 years long. So I don't think we think and talk about exits as much because India is at an early stage right now and markets are evolving so fast. If you think about it, even in the non-gaming space, till a few years back, all the exits we have had were either small M&As, like $150, $200 million M&As, or Walmart buying Flipkart or SoftBank buying Oyo shares.
Right.
That is the only exit that we have had.
Right.
And public was not even a part of the question in general.
Right.
But over the past 3 years, that has changed. And now going public is the standard way to make real exits. And in gaming as well, this will happen over time. Harsh is not there, but if Dream11 goes public, that would lead to a big, like lots of companies will go public after that, and that might be a good starting point. Nazara, of course, getting into new spaces is a good starting point for companies going public. Because of China challenges, lots of global investors are now looking at India for acquisitions, and lots of publishers are now coming to India for acquisitions. That is exciting. In the RNG space as well, lots of sports books are looking at India for acquisitions and partnerships. So exits will happen. In general, investors have longer term horizons that we don't worry about exits as much. We are worried about building and helping build real long-term companies, and monetization will happen.
Sure. Just a follow-up question on that, Pratik. How do you time the investment and the exit? At what time do you think it's right for us to get into a particular company, at what stage the company is, and then when do you think the company is ready for an exit point of view? Is size the only criteria or something else as well that you look at?
Yeah, so entry point is easy, right? Because we are early stage investors and we come in very, very early. So that's an easy problem.
Yeah.
On exit, see, most exits in India have not been designed by the investors. Most exits have either been IPOs or it has been companies getting acquired to other companies. And that is typically not initiated by investors. And like I said, most of us are such long term that we want to stay behind our winners and not look for short term exits. Now the market is hype, let's sell a few shares. Most of us don't do that. That has cost us a bit as well, because so many companies have gone up and gone down.
Right.
But in general, it has helped us because we have been able to grow with our winners, and that is the right way for VCs to capture value.
Right. Paavan, a question for you on this. You mentioned about investors asking for 100% growth. Certain investors will ask for be profitable. So in the current environment that we are in, what's the view, what's the sense that you're getting on this growth versus profitability conundrum that we are, many promoters, many founders will be facing? What's your view on where the industry is today, or what's your thought on that?
I think industry has multiple verticals, right? And every vertical is at a different stage of maturity. I would say, 80% of the funding that's been raised in last 4-5 years has been in real money gaming space, right? About $2.5 billion. There is the cumulative private market valuation of about $20 billion. So there the idea is that once the tax dust settles, which is going to settle sometime soon, and like Pratik mentioned, Dream11 going public, I think as these companies go public, or let me put it this way, I think the expectations from the market is that these companies should go public, so that all this capital, all these investments that have been made, $2.5 billion, generate massive returns, and all this capital goes back into the Indian gaming ecosystem. Right now, this capital is locked, right? So that is the expectations from that vertical. Of course, if you look at on the non-real money gaming side, where let's say, from game studios perspective, I think the angle is, there should be more compelling games to be built that could serve and, properly monetize either the Indian market or international market, right? So I think, and maybe, investors should add on it, but the expectation is to find probably the next Play Simple, right? Or figure out the next Moonfrog, right? Where, what could be those games which can really monetize well? Monetization is a big challenge, right? Engagement, retention, traffic, DAUs, MAUs, all that everybody understands. India is great at it, right? We have so many people. But what I think investors are looking out for is where is going to be a good path of monetization. Because once there is monetization, there is business, and I think investment is all about investing in businesses, right? So I think, and of course, if you look at, Gen AI, which is sort of being the theme, I think a lot of it will over, next couple of months or quarters settle down as to what is the realistic use case of Gen AI, right? Right now people are like, Gen AI can do this, Gen AI can do that, but because there has to be a moat that has to be created around it. So I think with respect to that vertical, I think it's more about identifying what is the right way to create a moat around Gen AI. I think that is where the theses are getting involved. And every vertical is at a different stage, essentially, is what I'm saying.
So taking ahead from there and changing gears on the road ahead, right, for the next 3 to 5 years in the industry. Karan, I'll start with you. You've been kind of a disruptor in the sense that you've got a AAA game, got funding early on into this. Now, I don't see any reason why India can't have a successful large AAA game coming out of India for global, or a large gaming studio built in India for the world. Right? So what according to you has to change to sort of enable this? What has to change in the entire ecosystem so that we can enable this and sort of get India on the world map?
I'm really grateful you asked this question. I think one of the most important things is we need to believe. We need to believe. I've traveled, I've done several meetings, I've met so many people internationally and across India. There are more non-believers than believers that India can do AAA today. And I think that needs to change, and it needs to change very, very strongly. About 20% of our talent is from international territories, and they've worked in lead studios across the world. They've built AAA games, and they're working with Indian talent. We have several leaders in India as well. And all of us internally have one thing in common. We believe we'll build AAA games, When I talk to people, they go like, if you guys do this, it's going to be great. I say, there's no if, we will, because we're setting all the processes right. We're going to get there. So it's about having that long vision. It's about dreaming big, but setting a milestone or a task every day that you need to achieve. And at the end of the year, you've achieved 365 tasks. So ticking it off every day, and if you miss one, then trying and covering that, and doing that every day for as long as it takes to get to your deadline, and having that deadline set before time, right? So getting all of those things in order and believing in what you do and that you will actually do it is the most critical part, I feel, for India moving forward. It's 2024. We've not built a AAA game yet, and I think we need to do that as soon as we can. It's about one person unlocking, and then the entire ecosystem will, India will contribute, I think, to hundreds of AAA games in the future eventually.
Right. Great. Maybe we have time for one more question. So I'll open it up for the entire panel. Two-part question. One, which is the biggest trend that you're most excited about in the industry going ahead? And if you have to give one or two tips to the founders in the room, what would that be? Karan, you want to start first?
Sorry, I missed that.
Yeah. So two-part question. One, which is the biggest trend that you're most excited about in the industry going ahead? And if you have to give a tip to a budding entrepreneur in the room, what would be that one or top two tips that you would like to give?
I think the most exciting trend is, we're sitting on more than 500 million gamers today in India, and the market size is phenomenal. It's only going to grow. There are more connected devices. So the future of gaming in India is as bright as it can be. That's a great trend that's following. So there's everything for us to take and up for grabs. So I think that's something that's super exciting over the next few years. A tip would be never give up. I think it's my motto. Nothing worth achieving comes easy. So fight for it every day and go as far as you can.
So I think I may be a minority in the room, but I am very excited about Gen AI and how it's going to change the way we create games, like every aspect of it. We feel it's going to be, I feel it's going to be an enabler and it's going to change the way we look at things. Secondly, I feel that we actually create from India for the world. We do, there are maybe 4, 5, 10 companies that do it today at scale. We would love to see that that number reach to 100.
100.
Yeah. So that is something that I'm hoping for.
So one trend I would say is that Indians are now willing to pay for content. And
Sorry, Indians are?
Indians are now willing to pay for content. So many companies outside gaming as well are now growing to 20, 30, 40, $50 million revenue, which was unprecedented before. And second trend I would argue, taking from Anupriya, is that till 5-7 years back, neither investors nor entrepreneurs had confidence that we can build companies from India for the world. And now, well, we had, of course, many SaaS companies, but beyond SaaS, we didn't have anything. But outside gaming as well, we have now so many companies that have proved that we can be the best product and the best service for the global markets as well from India. And and hence the confidence in the ecosystem, which is amazing. On the tip side, I'll give one tip for entrepreneurs for fundraising. Think about differentiation a lot more, and that would mean talk about, especially in gaming, talk about acquisition and monetization levers more than anyone does. A lot of people talk about, I'm building this game, this is so exciting, and this will be very large. But most people don't talk about how are they uniquely thinking about acquisition, how are they uniquely thinking about monetization. But that is the place where most of the meat lies.
Sorry, I'll add just one tip which I forgot to give. But essentially, when we go on that fundraising journey, right, it's important to clearly articulate with this funding what is the success metric that I'm aiming for, right? That clear articulation in a founder's mind is very important for getting the confidence of the investor. Saying that the founder vision is clear. Okay, the path or the journey may be longer or more difficult than what you would have earlier anticipated. But a clarity in that thought is something which enables people to make decisions.
Yeah, fully agree with Pratik and Anupriya, especially in early stages. Showing that path is very important because sometimes you don't have the product right in hand. So somebody is going to just believe in what you will tell him. So at least tell him that this is the start point and this is the end point. Maybe not the end point of the company, but at least from this fundraise, I'm going to do this, and be extremely resourceful, be extremely hacky, I think create resources out of thin air, that's an early stage entrepreneur's journey. And predictions, I will say the whole of next session is about prediction 2025. So we should hear from them.
Anuj is here.
Yes, yeah. Anuj and everybody else. My co-founder Soumya is also on that panel. One thing that I'll fully believe is that Make in India for the world is happening, and it's not just cost arbitrage, it's not just India being outsourced certain parts of art or game development, but real, solid, authentic, first-time products being built in India, mastered in India, and now being taken over in the world. We are trying to do something similar with Winzo, where we went live in India, scaled in India, and now recently gone live with Brazil. Hopefully we'll kill it in some other countries outside India as well. So thank you.
Okay, thanks. We have time for questions, anyone? No? Okay. Round of applause for the panel. Thank you so much.
Thank you.